Welcome to Caracomp Insider, where high-tech facial recognition meets real-world intelligence. Picture this. Your phone rings. It's your kid's voice, panicked, saying they need money wired right now. You send it. Then you find out it was never them. It was AI, and when you call your insurance company, they tell you that's not covered. If you've ever picked up a call from a number you recognized, this story is about you. Because the voice on the other end might not belong to a person anymore. According to industry researchers, cyber insurers started carving deepfake fraud out of their standard policies on January 1, 2026. That's the date a lot of people stopped being covered without knowing it. And in India, reported deepfake cybercrime cases have jumped more than 5 times over since 2019. So here's the question threaded through this whole episode. If a fake voice empties your account tomorrow, will anyone pay you back? Let's start with how good these fakes have gotten. Security analysts describe a scenario that should stop you cold. An employee gets a call from the CEO, the voice is right. They hop on a video call, the face is right too. They follow every company rule for verifying who they're talking to, and they still wire money straight to criminals. Every safeguard worked. The person on the other end was still fake. For a business, that rewrites what verification even means. For the rest of us, it means the family member's voice you trust most is now the easiest thing in the world to copy. Now, the part that catches victims off guard, the fine print. Insurance experts say these older policies were written to cover direct communication fraud. Someone lies to you, you lose money, you're covered. But AI sits in the middle now. So insurers are arguing the fraud wasn't direct, that the AI was an in-between step that voids the whole claim. Courts are still deciding whether a fake voice counts as direct contact or not. Translation: whether you get paid could come down to one word in a document you never read. So what are people supposed to do? Buy a separate policy, what's called a deepfake endorsement. Industry pricing puts those at roughly $500 to $3,000 a year for a small business. That extra coverage pays for the forensics, the legal takedowns, the cleanup after a fake goes public. An expert framing I'll give you. That endorsement is the line between being a victim and being a claimant. One gets sympathy, the other gets a check. And here's what makes it messier. In India, lawmakers passed rules in 2026 forcing fake content offline within 3 hours, plus labels on AI media. A parliamentary committee even warned that current law treats a real video and a fabricated one exactly the same. But none of those rules say a word about getting victims their money back. The law can delete the fake. It can't refund you. Here's the twist most people miss. Not every insurer is running away. Some carriers went the opposite direction. They added clear deepfake coverage on purpose. So whether you're protected right now depends entirely on which company you renewed with and when. It's not a safety net anymore. It's a lottery. So let me bring it home. AI can now fake a voice or a face well enough to fool every check we've built. Insurance companies started refusing those claims this year, arguing the machine in the middle breaks the rules, and some victims won't find out they're uncovered until after the money's gone. Whether you run a company or just answer your phone, it's worth knowing one thing today, not tomorrow, whether your policy would actually pick up when that call comes. The full breakdown's in the show notes. Now you know something most people in this industry don't. Use it. And when you're ready to put it to work, Caracomp.com. We'll see you tomorrow.